From Neural Newscast, I'm Hannah Whitmore.
And I'm Jonah Klein. Today, we're looking at escalating tensions with Iran as the administration weighs significant new military options. Hannah has the latest.
President Trump has received a formal briefing from Admiral Brad Cooper, the commander of United States Central Command, regarding new military options against Iran. According to Axios, these plans include short, high-impact strikes on Iranian infrastructure. They also reportedly cover special forces operations to secure enriched uranium and potential ground movements to seize portions of the Strait of Hormuz.
That briefing triggered immediate volatility in global energy markets. Brent crude jumped nearly 7% to over $126 a barrel, the highest since 2022. Investors are pricing in the risk to the Strait of Hormuz, which handles about 20% of the world's oil and liquefied natural gas. On social media, motorists are already sharing images of pump prices reaching new daily highs.
The impact is also hitting the agricultural sector. In the UK, petrol has reached 157 pence a litre, but the primary concern for farmers is rising fertilizer costs. With urea shipments currently blocked, costs are rising rapidly for producers. These energy expenses are moving through the supply chain, likely leading to higher food prices into next year.
While Washington reviews military plans, the conflict is intensifying in Lebanon. The IDF carried out strikes against Hezbollah today, following a drone shootdown. 12 IDF soldiers were wounded in a separate strike near Shomerah, and evacuation warnings have been issued for 8 Lebanese villages. Many analysts now say the April 8th ceasefire is effectively failing.
Despite the regional instability, the Israeli economy is showing surprising resilience. The IMF expects Israel's GDP to grow by 3.5% this year, which would outperform every G7 nation. While the Bank of Israel trimmed its own forecast due to the hostilities, Governor Amir Yaron suggests growth could rebound to over 5% if the conflict is resolved. Technology is driving much of that performance. In March, we saw 2 of the largest foreign investments in Israel's history. Google finalized a $32 billion purchase of the cybersecurity firm Wiz, while Palo Alto Networks acquired CyberArk for $25 billion. These deals are funneling significant liquidity into the local stock market. However, economists like João Gomes of the Wharton School caution that this resilience has limits. The mobilization of workers for military service is creating labor shortages, and tourism has effectively stopped. Long-term stability likely depends on a peace framework that allows for reduced defense spending, which remains elusive.
Supreme Leader Mojtaba Khamenei is doubling down on a defiant stance. He issued a statement today saying Tehran would secure the Strait of Hormuz and protect its nuclear assets. This rhetoric is pushing the Trump administration toward more decisive military options, though those options come with a price tag that is starting to draw questions from Congress.
The Pentagon informed lawmakers that the war with Iran has cost the United States $25 billion so far. That figure doesn't include future reconstruction or asset replacement. On Tuesday, energy executives met with the president to discuss ways to limit the impact on American consumers as the economic costs become more visible.
That brings us to a major legislative deadline. This Friday, under the War Powers Resolution, the president must decide whether to formally seek congressional authorization for continued operations. The White House is in talks with lawmakers, but there is no clear consensus on the path forward.
Without that authorization, the United States might have to change how it supports regional allies or maintains the blockade of Iranian ports. That blockade pushed oil prices up another 6% yesterday. We're seeing a cycle where military pressure is meant to force negotiations, but the economic side effects are creating widespread uncertainty.
Markets in Asia and Europe are reflecting that risk. While London's FTSE closed higher, the Nikkei and Kospi both fell as investors wait for clarity on the next United States move. Analysts expect that if new strikes are authorized next week, oil could easily surpass the $130 mark.
It is a high-stakes moment for global supply chains. From the cost of fertilizer in the Midwest to the price of international travel, the decisions made before the Friday deadline will have direct consequences. We will continue to track the administration's response to the CENTCOM briefing. For Neural Newscast, I'm Jonah Klein.
And I'm Hannah Whitmore. Neural Newscast is AI-assisted, human-reviewed. View our AI transparency policy at neuralnewscast.com.